Welcome to the deep dive. Okay, you've given us a really interesting snapshot today, crypto market data from April 17th, 2025.
Yep.
And our goal here is simple. Pull out the crucial insights for you, someone who wants the key trends without, getting lost in all the noise.
Right. And we're drawing from a good mix, CoinMarketCap, CoinGecko, GSR, Y charts, plus some analyst takes.
So what jumps out first?
Well, it's this kind of odd situation. The overall crypto market cap, it actually ticked up slightly, landing around $2.7 trillion.
Okay, sounds positive.
Sort of.
Yeah.
But here's the twist.
Here.
Trading volume dropped, like significantly.
Huh. So stable, maybe slightly at prices, but fewer people actually trading.
Exactly. That difference, that divergence, that's really the core thing we need to unpack today.
Got it. So let's start with the general vibe, the sentiment. The crypto fear and greed index was hovering around 30, still in fear territory, right?
Yeah, definitely fear, which seems a bit weird when prices are holding steady, doesn't it?
It does.
Yeah.
So what's the theory? Why the fear despite stability?
Well, think about that low volume we just mentioned. It suggests people are hesitant, maybe waiting on the sidelines.
Makes sense.
And you've got ongoing worries about the bigger picture U.S. tariffs, what the Fed might say or do. Plus, altcoins have been looking pretty weak lately.
Ah, okay. So it's a mix of things creating that sort of cautious atmosphere.
Precisely. A holding pattern, maybe?
All right, let's zoom in on Bitcoin then. It stayed above $84,000, bouncing between, $84,100 and $85,200 roughly.
Held that level. But just like the overall market, its trading volume also took a noticeable hit, down in the $20 billion range, give or take.
So less action there too. What are analysts saying about BTC specifically?
They mostly saw it consolidating, like stuck in a range between maybe $81,000 and $86,000.
Okay. Building pressure.
Potentially. The feeling was it could be gearing up for a bigger move, either breaking upwards, maybe towards $90,000 plus,
Or the other way.
or potentially breaking down back into the high $70,000. Technically, it bounced off a key support levels of Fibonacci level, but was hitting resistance from moving averages.
Interesting. And on-chain, who's selling, if anyone?
The data suggested it was mostly short-term holders getting a bit jittery about the sideways price action, not the long-term believers. They seem to be holding tight.
Right, okay. So kind of a tense stability for Bitcoin. What about Ethereum? Was it just following suit?
Pretty much, yeah. ETH was stable too, around the $1,600 mark. Range was like $4,577 to $1,613.
And volume? Lower there as well, I assume?
Yeah, likely decreased. Probably sitting somewhere around, say, $12, $13 billion. There were some ecosystem things happening.
Like what? Anything major?
Well, Eigenlayer activated stake slashing, and the final Pectra upgrade testnet went live. But neither seemed to move the needle on price immediately. And maybe adding to the kind of wait-and-see vibe, the SEC pushed back a decision on Grayscale's Ethereum ETF staking proposal.
Regulatory uncertainty still playing a role. Okay, now this next point seems pretty stark. The altcoin market, everything except Bitcoin, reportedly dropped 41% in market cap since December 2024.
Yeah, that's a big number, 41%. Definitely got people murmuring about potential crypto winter again, at least for alts.
Wow, what's driving such a steep decline there?
Again, it likely ties back to those broader economic concerns we talked about, the tariffs, tighter fiscal policy, maybe making people less adventurous.
Less risk-on appetite.
Exactly. And also, reports suggested less venture capital money was flowing into newer crypto projects compared to before. The Coin 50 index tracking top coins was also trending down, confirming that weakness.
Okay, so a tough time for many altcoins. But it wasn't all doom and gloom, was it? Some areas still saw positive movement.
Absolutely. Even with the cautious mood, there was clearly some selective buying happening. Specific narratives were attracting attention.
Like what? Which sectors?
AI tokens were a big one. Render, FET, Teo, they posted some solid percentage gains.
Interesting.
Also, infrastructure and Layer 1 protocols. Think SOL, Near, HYD, they were up too. Some DeFi like AAV and Helium's HNT also saw gains.
So specific bets being placed?
Right. And CoinGecko highlighted cross-chain communication and the XRP ledger ecosystem as particularly strong categories that day. It suggests investors weren't abandoning ship entirely, but, looking for alpha in very specific stories.
A search for quality or maybe just specific hype cycles within the broader cooldown. What about regulations? Any key updates on that front?
A few things. The FDIC in the U.S. clarified banks could do permissible crypto stuff without prior notice, focusing on risk management. That kind of fits with hints from Fed Chair Powell about maybe easing some crypto banking rules down the line.
Okay, potentially positive signals there. What else?
The SEC was still active, holding meetings. They sent a comment letter to Coinbase, delayed that ETF staking decision we mentioned, and asked for comments on spot Ether ETFs in general. So, still busy.
Still a complex picture. And internationally.
A mixed bag. Canada put out formal rules for crypto funds. Hong Kong actually approved spot Bitcoin and Ether ETFs. That was big news.
Yeah, I remember that.
But then you had Norway looking at restricting mining and South Korea blocking some foreign crypto exchange apps. So different approaches globally.
And underpinning all this, still sensitive to those macro factors like U.S. tariffs and Fed comments.
Definitely. Even the IMF was warning about tariffs potentially hurting the economy. Crypto doesn't live in a vacuum.
No, it certainly doesn't. So wrapping this up, if we go back to that initial puzzle, the slightly higher market cap but lower volume.
Yeah, it really paints a picture of a market at a bit of a crossroads, doesn't it? Major assets like Bitcoin are holding firm, but there's this clear underlying caution. Macro fears, regulatory question marks.
And that split performance is key. Altcoins generally weak, but focused money flowing into specific narratives.
Exactly.
So for everyone listening, the big question this leaves us with is, what does this divergence tell us about risk appetite right now? Is Bitcoin becoming seen as the relatively safer crypto haven, or is this altcoin slump just a temporary dip before the next wave?
That's the million-dollar question, isn't it? Or maybe this multi-trillion-dollar question now. Something to definitely ponder as you watch how things unfold.
Indeed. Thanks for digging through this data with us today.